In today's video, we're going to zoom in on the S&P 500. I'll share some Fibonacci zones which the S&P has broken into today, along with ways to take advantage of this move from a day trading and a swing trading approach. Let's start with the Fibonacci levels first. I've used our Fibonacci extensions tool, which is this tool right here, to take 3 previous swings that the S&P has had and compare them to our most recent low. What I'm looking to gauge here is some idea of where the S&P is likely to exhaust based off of where the S&P has exhausted in the past. What kind of buying personality does the S&P have, and where do buyers typically tend to kind of take their foot off the pedal just a little bit, if you will. Now, using these 3 swings, I've extrapolated them from this low price. The 3 swings are the 2019 to 2020 period, the post-COVID swing, along with the October 2022 to about July 2023 swing. Using these 3 swings, if we call this 1, 2, and 3, 1 and 3 form this cluster zone, which the S&P has broken into today. That zone is between 514.53 up to 522.44. And with today's candle, we've started to make our way into this zone. Now, this zone doesn't mean the S&P has to exhaust, but what it does tell us is in the past, at least in the past, 5 years now, the S&P has typically found some sort of selling activity inside of this zone and has taken a little bit of a breather in an otherwise strong uptrend. If we look at the COVID rally extrapolated, that gives us a level way up here near 610.42, which is a ways away from where we are, and I think a little bit less likely to be tagged compared to these 2 zones, which right now we're chopping inside of. Now, to take advantage of this reversal on a day trading basis, I think you could use our Volatility Box models and focus on simply the short side setups. Here's an example inside of the S&P today, where price action rallied for much of the day into our aggressive Volatility Box models. And as soon as we hit the models, you can see how price starts to exhaust. We have a bunch of wicks to the upside. We see our overbought confirmation signal with the edge signals indicator. And we even see that 1-2 punch setup, which tells us that, hey, the sellers are taking over control. The buyers are trying to defend, but they failed, and the sellers have really won this battle. If we take a look at the same setup on a 5-minute time frame, you'll still see a similar idea with our overbought signals, along with momentum shifting. So this is what I imagine you would take advantage of for a day trading basis. Short side entries into our volatility models. This was an example using the daily models. If we load in the hourly stock models as well, you can see how the S&P for much of the day chopped around until the end of that 10 to 11 a.m. Pacific hour where it overlapped with our daily models. Now, for those of you looking for more of a swing trading entry, if we come back into our daily time frame, I imagine you could use something as similar as the edge signals indicator, which is this overbought oversold confirmation, but wait for the arrow to print inside of this zone. Now that the S&P has breached it, I imagine we might see maybe one more day, a Friday, of a rally, and next week will be the interesting tell of what happens once we're somewhat inside of this zone. That's assuming we don't just see a puke tomorrow. So the S&P, I think, is getting to this very interesting level where for those of you that have been waiting for either short side setups or for taking some longs off, well, the S&P is now entering the place where in the past, rallies have exhausted somewhere in between this zone. I hope you found this video helpful for those of you that like to trade the SPY ETF or even the ES futures. The same concept holds true with our Volatility Box models. If you come in and you load in the Volatility Box models, we start with the scalper today, which was broken in the morning. You then load in the aggressive. This gives you an idea of where you're looking for short side setups and looking to take advantage of these moves. The daily models were a little bit nicer of an entry today because that's something that happens less frequently, but still gives you an idea of how across asset classes, the S&P is starting to give you some nice short side setups. Take care, everyone, and I'll see you in our next update.